Good morning, students. Welcome back to our economics class. In our previous class, we have done with public revenue and public expenditure. Means what are the sources of public revenue and what are the items that are listed in the public expenditure. So today we are going to start with another important question, that is public debt. Like as we have seen in previous class, public finance. Public finance means what? Finance of the public authority. Public authority means who? Government. Finance means what? Income and expenditure of the government. So the income and expenditure of the government, what we study is known as public finance. The income of the government from various sources is called as public revenue. The expenditure done by the government on various economic activities is known as public expenditure. And when income is less but expenditure is more, then government will borrow funds from various sources. So that is called as public debt. So today we are going to see this public debt. What do you mean by public debt? Borrowings of government when expenditure is more than income. When expenditure is more than the income, they do the borrowings. These are called as public debt. So when they borrow money from various sources, it is called as public debt. Okay. So this public debt, we can write it as, means when government borrow funds from internal sources, that is banks, financial institutions, banks and financial institutions within the country is called as internal debt. So see here, internal debt means what? When the government borrow funds from internal sources. Internal sources means who? Banks and financial institutions within the country. So that is called as internal debt. Okay, next we have external debt. External debt means what here? When the government borrow funds from external sources. External sources means what? Like we have IMF, International Monetary Fund, World Bank. When the government borrow the funds from external sources, that is IMF, that is International Monetary Fund, and the World Bank, such debt is called as external debt. So you just see here, every country, when the expenditure is more than their income, they borrow funds. When they borrow within the country, then we call it as internal debt. And when they borrow the money from external sources, external means outside the country, financial institutions outside the country, when they borrow, we call it as external debt. Okay, so our internal debt, public debt is divided into internal debt and external debt. Is it clear? Now, just we will see, when the borrowings are made by the government, they have to repay the debt. They have to repay the debt. Means when you borrow money, you should repay your money back. Okay. So see, even the government also, when they borrow the funds, they will repay them. So that repayment of debt is called as redemption methods of various sources of redemption method. So here we can say redemption, or you can say it as repayment of public debt. Redemption methods of public debt. So when you borrow money from any source, how you will repay that one? When we take money from someone, we have to repay that money back here. So what are all the various methods we follow to repay the debt? So here the various methods to repay the debt are, first one is surplus budget. First one we have surplus budget. Surplus budget is what? When public revenue is more than public expenditure, means with the government, when income is more, like revenue. In the previous class, we have discussed public revenue. When they receive more taxes or more income the government is getting, the excess, the surplus, whatever is left, that is used to repay the debt. So here, when the surplus, the budget will be there, when public revenue is greater than expenditure, surplus income will be there with the government. That surplus income is used to repay the debt. That is called as surplus budget. Then another method of repayment is refunding. Refunding means what? When government issue bonds and securities to the public, means they sell the bonds, government bonds and all. So when they need money to repay the debt, when debts are more with in the country, then they will do refunding, which means issue of fresh bonds and securities of the government. When the government issue fresh bonds and securities, they earn some income. That income is used to repay the debt. Okay, so that concept is called as refunding. The next methodology is annuities. Annuities, that is the annual payment. So part of public debt is paid every year. Every year, part of debt is paid annually. So that is called as annuities. Means every year certain amount will be kept aside by the government when they prepare the budget. So that amount which is kept aside to repay the debt, that will be used for repayment of debt. So that is called as annuities. Annuities means what? Every year part of debt will be clear, like installment basis we can say. So that is annuities. Then next one we have sinking fund. Sinking fund means what? When the government receives certain grants from various sources, that will be deposited every year into separate a fund account called as sinking fund. Okay, so here government prepares separate fund. Government prepares separate fund called sinking fund. Means every year from the revenue, they transfer the amount to the sinking fund, and that money is used for repayment of debt. Like every year, whatever the revenue they are receiving, okay, certain amount will be transferred to sinking fund account. The government will maintain the sinking fund account. So when they receive the revenue, particular amount is transferred to sinking fund, and that amount is used for repayment of debt. Okay, so that method is called as sinking fund. Next method we have, that is conversion. Conversion means what? Old loans are converted into new loans. Conversion means Generally, when the government borrow the money, whatever the old loan is there, they will repay that old loan. How? By taking new loan. Means old loan will be converted into new loan so that old debt will be cleared. New debt will be continued for the next years. Okay. So that way conversion is one methodology. Another method to repay the debt is additional taxation. When the government requires revenue, they charge extra taxes or they charge high taxes from the public. As they collect the taxes, taxes is a source of revenue to the government. So as they collect the taxes, those amount, that income is used as repayment of debt. So extra taxes, additional taxes is levied on the public on various sources, and that extra taxes, whatever is collected, that income is used to repay the debt. That is called additional taxation. Then next one you have capital levy. Capital levy is what? Heavy one-time tax on capital assets. So capital levy means what? Whenever any producer or any industry, when they purchase capital equipment means what? The machinery or land or building which are used in production process. When they purchase these capital equipment, heavy one-time tax is collected by the government. Means when you import some machinery from other country, at a time you have to pay the tax on that machinery. So that is an additional income to the government. That amount is used for repayment of debt. So that methodology is called as capital levy. So capital levy means what? Heavy one-time tax on capital equipment. Asset, or you can write also equipment. One-time tax on capital equipment, right? Then finally, another methodology of this repayment is surplus balance of trade. Surplus balance of trade, that means here, when imports are less and exports are high, the excess amount, see, when imports are less than export. Export means what? These are our receipts. Import means what? Our payments. So our payments are less, receipts are more. The amount what we receive from export is more. So we will get surplus amount over here. That surplus reserves what we have it, that is used to repay the debt. Okay. So these are the various sources or various methods for redemption of public debt. Just see here, what are the methods where repayment of debts are done here? Surplus budget. Surplus budget means in the budget, when budget is prepared, revenue will be greater than the expenditure. The excess revenue which is collected by government is used to repay the debt. That concept, that method is called as surplus budget. Next, we have refunding. Refunding means government will issue fresh bonds and securities in order to raise the income. So that excess, income which they get from fresh bonds and securities is used to repay the debt. Next, annuities. Annuities are the amount which is paid annually. Means every year certain amount will be used to pay the part of the debt, like installment basis. Next, we have sinking fund. Sinking fund means government prepares a separate fund called sinking fund. Every time whenever they receive the public revenue, certain amount will be transferred to sinking fund. So this sinking fund is used to repay the debts. Conversion means old loans are converted into new loans. When government could not repay the old one, so they will take new loan, and that new loan is means they will use that new loan to repay the old loan. Okay. Then next one, additional taxation. Extra additional taxes are collected by the government. So that income is used to repay the debt. Capital levy, heavy one-time tax on capital equipments. When in the country producers or industrialists are purchasing capital equipment, that moment heavy tax is collected by the government. That amount is used to repay the debt. Surplus balance of trade. Surplus balance of trade means when a country is importing the goods and exporting the goods, international trade. When imports they are doing, they have to make the payment. When exports are done, they will receive the money. So when imports are less and exports are more, means our receipts are high and payments are low. So that excess income from balance of trade is used to repay the debt. So these are all the various methods for repayment of debt. Various methods of repayment of debt. So here you can see what is public debt. Public debt means borrowings of government when expenditure is more than income. When they borrow funds from internal sources, that is within the country, we call it as internal debt. And when they borrow funds from external sources outside the country, we call it as external debt. So what are the redemption methods of public debt? Repayment. How the repayment will be done when they borrow the money? Surplus budget, refunding, annuities, sinking fund, conversion, additional taxation, capital levy, and surplus balance of trade. So this is again one more important question for your 5 marks. So this is important for your 5 marks question. Public revenue, public expenditure, and public debt. So from this chapter, you prepare these 3 questions: public revenue, public expenditure, and public debt. Now let us discuss with the important VSAQs of this chapter. LAQs, as I told you, you can leave that LAQ in choice. Okay. So instead of that, you prepare with these SAQs and VSAQs of this chapter. Now let us see the important SAQs from this chapter. First question. Says law of market. Says law of market. JB say explained the law. JB say explained about goods market equilibrium, where supply creates its own demand. Where supply creates its own demand. Okay. So this concept was explained in law of market, which was explained by JB Say. So in the market is in equilibrium. Market is in equilibrium where demand is always equals to supply. Means always in the market there will be an equilibrium where demand and supply both will be equal. If supply is increased, we use more factors, it automatically increases the demand for the commodity. Because all the factors will earn income. That income is used to demand the goods. So, always in the goods market, there will be an equilibrium where demand is equals to supply. So, what was explained in Say's law of market? It was explained by J.B. Say. This was explained in case of goods market equilibrium, where supply creates its own demand. And always demand and supply will be equal. So this is the concept of Say's law of market. Next question you have. Full employment. Only the important questions I'm explaining here, not all the questions. These questions you prepare, that is more than enough. Full employment. People are willing to work at the existing wage rate. In the country, people are willing to work at the existing wage rate. This concept is called as, in the economy, this concept is called as full employment. So generally full employment means what? When the people are willing to work at the existing wage rate, that is called as full employment. Now, next question. Effective demand. Effective demand. It is a point where aggregate demand is equal to aggregate supply, and economy will be in equilibrium at effective demand. At effective demand. So you can write effective demand is equals to aggregate. Effective demand is where aggregate demand is equals to aggregate supply. That is called as effective demand. What is effective demand? It is a point where in the economy, the total demand is equals to total supply. At this point, the economy will be in equilibrium. So that concept is called as effective demand. Now, the next question. So the next question is after effective demand. Important question, wage cut policy. Wage cut policy means what? This concept was explained by A.C. Pigot. A.C. Pigot has explained the concept of wage cut policy, where wages of existing labor is reduced and given to new labor and created employment So here, what is the wage cut policy? Reduce the wages of existing labor and give that amount to the new labor so that employment is created in the country, right? This was suggested to create new employment to attain labor market equilibrium. To attain labor market equilibrium means in the labor market, to get the equilibrium, wages of existing labor should be reduced, new labor will be created, jobs, and these wages will be given to them so that we can attain labor market equilibrium. This concept was explained by A.C. Pigou. So that is called as wage cut policy. So after wage cut policy, when the existing labor wages are reduced to create employment for attaining labor market equilibrium, that is called as wage cut policy. Now the next question, next important question. Like we have public finance, public expenditure, public debt and all. Already we have studied all those things. Capital levy also just now we have discussed. Next we will study federal finance. See, now in this you can revise public finance. What is public finance? Income and expenditure of the government is called public finance. It includes, what all is included in public finance? It includes public revenue, public debt, and public expenditure. So this is called as public finance. Okay. So what is public finance? Income and expenditure of the government is called as public finance. It includes public revenue, public debt, and public expenditure. Now, already we have done with what is public revenue. Income of the government from various sources is called as public revenue. There are two sources, that is tax revenue and non-tax revenue. So you have to write that one here. That is one SAQ. What is public debt? Just now we have studied that one. Borrowings of the government when expenditure is more than income. They borrow either within the country or outside the country. Within the country, we call it as internal debt, and outside the country, we call it as external debt. Public expenditure, the expenditure done by the government on various economic activities, such as defense, pensions, scholarships, loans, grants to the state government and foreign governments, right? Economic and general services done by the government. That is called as public expenditure. Okay, so hope you understood all these three VSAQs here. Now, the next question you have federal finance. Next question. Federal finance. Federal finance means what? It is the federal finance is the finance of central government as well as the state government and the relationship between the two. So it is a federal system of finance. All revenue and expenditure are divided among central, state, and local government. So we can say here, federal finance is the finance of central government, central government as well as state government and relation between the two. Relation between both the central government and state government is called as federal finance. So, in federal finance, items of revenue and expenditure in federal finance, items of revenue and expenditure are divided among central, state and local government. Central, state and local government. See, what do you mean by federal finance? Federal finance is the finance of central government as well as state government, and relation between the two means some income is received by central government, some income is received by state government. So when state requires, central will give some funds. When center requires, state funds are used by them. So that relation between central government and state government, the financial relation between the central government and state government is called as federal finance. So in federal finance, what items will be there? Revenue and expenditure of local government, state government, as well as central government will be there. So this system is called as federal finance. Next question. What is budget? Budget means what? It is a statement. It is a statement which shows the income and expenditure, which shows the income and expenditure of the government for a financial year, right? So here we can say, what do you mean by budget? Budget means it is a statement which is prepared by the government, which shows the income and expenditure of the government for the financial year. So that concept is called as budget. Then next question you have fiscal deficit. Fiscal deficit. Fiscal deficit is the difference between, it is the difference between total expenditure. It is the difference between total expenditure and total revenue. Total expenditure and total revenue plus market borrowings. Plus market borrowings. So you have to write down the formula here. Fiscal deficit is equals to, what is the difference between total expenditure and total revenue? That is budget deficit. So you can write it as total revenue minus total expenditure plus market borrowings. So this is called as fiscal deficit. And Next question is budget deficit. Budget deficit is what? In the budget, when revenue is more than, in the budget, when expenditure is more than revenue. So, budget deficit means in the budget, when total expenditure exceeds total revenue, when the total expenditure exceeds total revenue, we call it as budget deficit. That means total expenditure is greater than total revenue. Revenue is less, but the expenditure is more in the budget. We call it as budget deficit. Last and final question, that is GST, goods and service tax. Goods and service tax, it is a combination of all indirect taxes, or we can write replacement of all indirect taxes. It is a replacement of all indirect taxes which is levied on goods and services. So it is a type of indirect tax. The various slabs are 5%, 12%, 18% and 28%. The various GSTs that are collected by government is CGST, SGST and IGST, as we have discussed in detail in the previous classes. So just for 2 marks, you write down this much. GST is the goods and service tax. It is a replacement of all indirect taxes. The various slabs in GST are 5%, 12%, 18 and 28%. The different types of GSTs that are collected in the country are CGST, SGST and IGST. So these are the various VSAQs you have to prepare from this chapter. Just go through these one. So just see this one, students, only these VSAQs you prepare from this chapter. Sales law of market, full employment, effective demand, wage cut policy, public finance. Again, in public finance, you have to prepare with public revenue, public debt and public expenditure. Then federal finance, budget, fiscal deficit, budget deficit and GST. From these only, you will get the questions for your exam. So in this chapter, what questions you are preparing? Important questions from this chapter is sources of public revenue, redemption methods of public debt, redemption methods of public debt, and items in public expenditure. So these 3 questions, if you prepare, this will be for 5 marks. Any 2 you will get from exam point of view. So almost 10 marks you can score here. And the VSAQs, what I told just now, what all the VSAQs we have discussed now. From these VSAQs, 2 you will get compulsory. So 10 plus 2, 10 plus 4. So 14 marks you can score from this chapter. LAQ I'm not explaining now. Why? Because you'll get confused here. LAQs you just prepare with diminishing marginal, perfect competition, national income and variable proportions. Those questions are enough for your LAQs. These questions you prepare for your VSAQs. That is, now see the what all questions we have done today. Debt, public revenue and public expenditure. Public revenue is the income received by the government. Public expenditure is expenditure done by the government on various economic activities. Debt, when expenditure is more than income, then they borrow funds. These borrowed funds are called as public debt. So in next class, we will do with next chapter questions. So this is all from this chapter. Hope you understood and prepare with these questions for your exam.